Thursday, April 13th, market analysis, Stan Ehrlich. As you guys know, I start out with the indexes first, usually the S&P 500, like this morning, and go to commodities, and sometimes go to forex and sectors, but not too much is happening in forex and sectors at the moment, so I'll pass. Today, the S&P 500 came extremely close, and it's still very close to canceling out yesterday's bearish engulfing, which created, so far, it's still a double top, with the two highs being bearish engulfings, ER sell signals. You can't judge by the current quote at almost 412, and yesterday's high was 412.17, that it's going to work. But I will say this: if you had the inclination to follow the bearish engulfing yesterday and the signal, and you had the opportunity to put on a short position around where we are right now, your risk is extremely small, 20, 30 hundreds, because the fail safe is just above the high of the bearish engulfing. And just because we're super close does not mean it's not going to work. It may still work. I can't tell. Usually we come not so close, but being so close, the implication is we're going to get stopped out, which we may, and then we wait for another signal. Now, as you all know, I'm still very bullish on the stock market indexes. I am expecting, but that may change if we close super strong today and new high ground totally. I was expecting, and still do, that we would come back down first to about 396.7 area and close a gap that happened a couple of weeks ago. Gaps are almost always closed. They're like a black hole in space that tend to suck the price action back into the gap area. I say that almost every time I talk about gaps, and it almost works every time too. This may be one of those times that it doesn't work. We'll see. Time will always tell. So let's go to the DIA, and we've got similar situation here, except we have made a new high for the rally on the DIA. Now, this new high is poking through very slightly, not very significantly so far, a major bear trend line. And yesterday's high was right on that line. It goes across the top since early December. And this is the third time, so it's the first test of the trend line. You need 2 points to draw the trend line to start with. So this is the first test of the trend line. And so far, we're right there, a hair above it, which is okay still. And there's no exact rule as to how much you can get above or below to claim that you're testing the line. Just very close is a good thing. And this is slightly above, barely. So if it turns down from here, I may get another bearish engulfing, which is possible, but it needs to make it below yesterday's low, which at the moment we're up 261. Doesn't look particularly likely. I am making this recording a little late today at 10:29 California time right now. So I'm a little bit discouraged that the signals are not kicking in like I was hoping for and expecting, and that would be a significant down day, maybe even gapping down this morning, which did not happen. Opened higher and then started to work its way up. What about the QQQs? The Qs have come, like the spider, extremely close to yesterday's high, but have not made a higher high. And remember, the Qs have, in the last week or so, have been the weakest, while the Dow has been the strongest. The Dow is already in new highs right now and breaking a trend line, maybe. The Qs aren't that close to the highest high a week and a half ago when it got overbought. So they're losing some ratio strength to the other two indexes, while the spider's kind of caught in the middle. It's a little bit closer to what the Dow is doing. They're about equal, but the Qs are definitely a bit weaker. Yesterday, we made a new low for a couple of weeks with that bearish engulfing. But today, we're up to a high so far today and very close to it now at 318.24, and yesterday's high was 318.42. So very, very close to canceling out the bearish engulfing of yesterday, the ER sell signal, but it hasn't done it yet. It's got to turn down right now, right here. Can't really go any higher to speak of. Of course, hitting my little yellow dots is an indication that you're out. That signal didn't work. Not all of them do, like October 13th. What a whopper. I said that was coming in advance. I coached you right through it. Told you where to buy on a downside retracement. And I screamed bloody murder. It was going to be a very, very, very profound reversal. And it's the low of the bear market for 2022 and so far the beginning of the market for 2023. You can't get more profound than the bottom for a year before and so far half a year afterwards. All right, so that's the stock market indexes. Let's look at some of the brand new signals we had yesterday in some of these futures contracts. Now, we have an outside down day yesterday, an ER sell signal in bonds. Today's little rally opened higher. We're short on the opening. We're a little lower at the moment than the opening. Therefore, we have a small profit on the ER3. And there's nothing wrong with the way this is acting at all so far. I need to get below yesterday's low on a closing basis. That would be very nice, and I hope we do it very quickly. Today, tomorrow, something like that, maybe Monday. Sooner the better, without touching those yellow dots. So, next chart. And I'm not real bearish. I'm modestly bearish. I do think interest rate futures are building major long-term bottoms. But there's going to be, up and down moves involved in an uptrend or downtrend for that matter, one or the other. We caught the top of the 10-year note market. That was fantastic on August 2nd of 22. No bottoms lately and no signal in the last several weeks. So I'm neutral to slightly reactionary, maybe coming down to 114 only because the resistance area at 116.17 area has stopped all of the rallies lately since January. And there have been 4 or 5 now time frames when that price range has stopped the rallies. Closing above 17 is going to be super bullish. Next chart. Crude. We had a sell signal a couple of days ago. It got ruined the next day, so that was a boo-boo. But it was a very small loss. Again, my stops are relatively close. They don't take really large losses. They're always small to maybe small medium. And definitely some of my sell signals and buy signals are whoppers. What's the top of the market back here on June 14th of 22? Huge bear market afterwards for many months. And depending upon your inputs, you can use the defaults, but you can change them so that the trailing stop is a much slower. It's not a moving average. It combines 2 different techniques and custom versions of those techniques. Anyway, resistance area so far is stopping this rally, and I'm looking for a modest retracement down to around 75 something to close that gap from a week and a half ago. Next chart. Heating oil. Kind of neutral. Trend is ambiguous. Big moves up and down. We caught the top of the last one here. That's just great. January 24th, 23. Also almost the exact high day on November 8th of 22 for very big moves in the bearish direction. And we caught the top of the market back on June 21 of 22. I know there's not a signal every damn week, but some of these are so profound they last for weeks and months with huge numbers behind them, profits. And we also caught a great buying opportunity back here on September 19th, a buy signal on the 22nd, September 19th of 22. Next chart. Natural gas. We had a buy signal that worked for a couple of weeks with a very good profit, not huge. And now it's broken support, and it is staying below support. After a rally a few days ago, we look like we're about to make, or just did make, minor new lows to the move down. In fact, it's very close, but not quite. This could be the lowest close for the bear trend. And that probably indicates that we're going to see a lower low ASAP. Next chart is gold and silver and platinum. And wow, we caught the exact bottom on all 3 of them. On the low, February 28th, we have a green ER buy signal. created a double bottom with the second one slightly higher than the low of the bullish engulfing ER buy signal. And today we have a new high for the whole trend up again since February 28th. Look, a month and a half, looking really good. Nice big move. Next, fantastic low on March 10th and an ER green buy signal on that date, the low of the bear move and the beginning of the bull move. And we have a new high and a new high close likely today for silver. That's 2 out of 3. And platinum, we caught the second low on a minor double bottom, which was, in this case, the lower of the two lows on February 27th. And we have a new high for the move up today. But we're starting to get overbought. Big up day. So maybe a little bit more in the next day or two, but we're coming close to another modest downside correction in this uptrend. So far, we've got the lowest low for many months prior and afterwards, and that was in September. And we have a buy signal a couple days later, very close to the bottom, so that was good. And all of the lows since then have been at higher levels, in particular pointing out, of course, the February-March timeframe. It was the end of February. Now we need to make a higher high than the top, which we caught as a sell signal on January 11th. That would be very convincing long-term uptrend for platinum. Next chart, high grade, neutral, a little boring, sideways, not too much going on, no great signals lately. We caught the bottom way back here on September 28th. That's great. Not much else going on in copper at the moment. Next, soybeans. We got a buy signal about a week and a half ago. We got the retracement, which is typical. And today we came close to making a higher high since the buy signal, but it didn't quite do it. And now we're a little bit lower on the day. Don't like that. If we're going to get up there and get close to resistance, I want it to stay up there or blow through it and close above it to break out to the upside even more. But this kind of activity where it gets close to resistance and backs off again, especially getting lower than the previous close, is not particularly a good sign. Be careful. I'm a little concerned about this signal not panning out as well as I'd like. Now, granted, ER1 got long at around 1484, the day of the green bar. And it had a really good move in a day and a half up to 1528, come and gone. I'm not saying we took all of that out of the market, but probably 50% of it or more with ER1. ER3 could still be long and slightly profitable. Next chart, bean oil. Buy signal worked for a couple of days, a couple of weeks ago, and now has dropped off below the bottom of the bullish engulfing. And now we're waiting for new news. But this bear trend seems to be intact. All the highs are lower and lower and lower. And since way back in September, and almost going back to July, not quite, which is an old support level, and we were oversold there at that price level, 51 and change. So no surprise we had a good rally. But now we're coming down again. The long-term trend is down since, again, November. So we're looking at basically a half a year. And I think it's going to make new lows fairly soon. Soybean meal, trend is up slowly but surely. Nothing new here. Neutral to bullish. Next chart, corn. It's trying to break those resistance support levels, which it did, but it got oversold, and now it's rallied a little bit more than I would have expected and got overbought. So we had a sell signal a few days ago, which didn't really work very well, but just a little bit. And then it's failed today by getting above the high of that bearish engulfing a few days ago, and that date was the 6th of April. 5th of April, sorry. So neutral to bearish on corn. Looking for new lows, 608 looks like, or lower in a few weeks or sooner. Next, don't chase markets that are going straight up like cattle. Now, I'm tickled pink that we, and that would be medium rare, bought the market on March 24th with a green bullish engulfing ER buy signal almost on the exact low. And it's gone pretty much straight up since that date. Overbought conditions warn me that it's about to turn down. If I still had a long position, I would be tightening my stops up even closer and closer and closer. Next chart. Hogs. Buy signal didn't work at all, frankly. A couple days ago, out, small loss. Oversold condition again today, so I'm looking for another bounce. But that bounce probably is a new short sale. Hopefully we'll get a sell signal or red one soon for a new short entry. But new lows for the trend and for many months, and expecting this to continue to trend lower for live hogs, the other white meat. Next, OJ. Warned you that this market could come down at any point. So far, it's just gone sideways. And that would be because RSI got up to an extremely high level, up to about 90, 91. The last time it got up there, it stayed there a little bit longer than I would have expected, and then finally had a very big break for 2 or 3, 4 days. Could do the exact same thing again, and very soon. Next chart. Cocoa. Bullish, trend is up. Buy corrections, sell into rallies. Next. Sugar. Sell into rallies. Overbought, very much so. Well above 90. Looking for it to turn down. Today, you've got sort of an inside trading range with a slightly higher current quote. No big deal at the moment. Looking for a downside correction, probably in the area of 23 down to 22. Next, E-mini, S&P 500, hasn't broken its previous highs, but remember, it has different trading hours, and before and after the regular SPY, S&P 500 ETF trading with the standard stock market hours, this can get higher and lower during the off hours, or the AM and PM pre-market, post-market. And that's what's happened here. So that's why the high is farther away from yesterday's red bearish engulfing. Okay, so we're up 4 1/3 on the spider at the moment. Last quick check on that. And we're going to find that we have now made a higher high on the S&P SPY spider. And the DIA has also made another minor higher high. Everything's climbing, and all 3 of my what looked like really good sell signals yesterday are now broken, ruined, not valid. This could mean that we're not going to have that downside correction I was expecting. It certainly tried to do it, but it didn't. And now it looks plausible that we could go up very sharply and very quickly and make those new historic highs I've been talking about and expecting for many weeks now. So you have a great day. Talk to you tomorrow. Thank you. Stan Ehrlich, signing off.